I have some bad news for you. America's K-shaped economy is here to stay. If you haven't heard that term yet, well, it's a fancy way of saying the rich get richer and the poor get poorer. It pretty much describes the country's worsening inequality gap. Economies can be classified in a few different ways as they rebound from a recession. Economists have widely agreed that the US has been in a K-shape coming out of the pandemic. I've been writing about this for a few years. The K-shaped recovery explains how high-income consumers continue to splurge on luxury goods, homes, and travel, all while keeping their jobs during the pandemic. Consumers on the lower end of the spectrum are struggling to afford basic necessities like housing and groceries, and many during COVID lost their jobs or suffered pay cuts. Now the latest economic data shows that K-shape is diverging as much as ever. Like why airlines are racing to build out luxury offerings, and at the same time, fast food companies keep announcing new value meals. Federal Reserve Chair Jerome Powell talked about it at the most recent Fed meeting earlier this week. A key measure of wealth concentration, or the amount of wealth held by a select few, is sitting at a 60-year peak. That's a notable reversal from its multi-decade low seen when economic stimulus checks were rolled out during the pandemic. And speaking of records, the top 20% of US consumers, so those making roughly more than $175,000 a year, spent a record high in 2025. The other 80% of Americans spent a record low, and their spending has not outpaced inflation for the past 6 years. Our current situation really started decades ago during the Reagan administration, but it became better understood during the 2008 financial crisis and housing market crash. The jump in unemployment also reduced the earnings potential for people who weren't being steadily employed in their prime working years. Economists think the problem is just going to get worse. President Donald Trump's One Big Beautiful Bill shrinks social programs like food stamps and Medicaid for the poorest Americans. And outside of politics, AI will likely disrupt who will get well-paying jobs. And the US labor market is already unstable. There were over 50% more layoffs in 2025 than in 2024. So the economy's on a shaky foundation. As Mark Zandi put it, think of it like a house. You want it built on a broad, solid base. But right now, it's sitting on a few poles sticking out of the ground. If one of those poles get knocked out, the whole house is at risk of crashing down.